We haven't put on a trade in over a week, which is highly unusual because we're pretty active traders. But we feel like whatever you're getting into the market now, we're not sure whether this is the last gasp to the upside because of the diversion that we've been seeing. And this is what's kept us on the sidelines. Although NASDAQ rockets to new highs, semiconductors are doing well, the mega cap growth stocks, particularly Apple, are rallying. And that's all very impressive. I have seen this happen so many times through the years where NASDAQ chip stocks, mega cap stocks lead, but yet you see things like small caps, transportation, financials, even retail starting to suffer a little bit. And that diversion generally means one of two things. Either they're waiting, the weaker sectors are waiting for some sign that the GDP will actually grow past the reopening trade, or they already know that something, market being smart, looking in advance, that there really isn't much growth past the opening trade. And these mega caps are reacting to the yields and the earnings season coming up, which is expected to be positive. And we'll look around at some point and go, hey, where is everybody else, and start to sell off. And that type of diversion can take a couple of days to work out. It could take a week, 2 weeks, could take a month, but it has to be worked out before I would put a lot of money on the table at this point. So that's it. We have the FOMC this week, and a lot of hawkish talk came out of the Fed, although the yields are lower. So we'll see how the general market reacts. I think that sitting out for the next few days until the Fed comments get absorbed into the market and we see whether this diversion continues to divert or whether or not we see more of a convergence, it's okay to be a little patient right here. My understanding of Didi as a actual ride service in China is that it's the largest one and has generated a lot of income as a result. So this hit to the stock based on China's retribution, so to speak, and also cracking down on the cybersecurity, and also removing the app is certainly hit the actual stock. How that reconciles with the company itself, listen, it's going to hit the bottom line profits, obviously, of the company. And I think they raised, I forget, it was in the billions of dollars in terms of revenue before the IPO. So this is not pretty for the stock at all. And unfortunately for the investors who got involved. But yes, you have to be somewhat reticent now about getting involved in some of these Chinese stocks, and particularly the IPOs, because this is sort of a dance that's been going on here, whereas it comes out in the United States, and then China smacks some regulations, and then it hits the stock price. Whether or not that turns out to be, well, all of a sudden now it will be illegal to have Chinese companies debut IPOs in the United States remains to be seen. We've seen threats like this through the years over and over. Look what happened with Alibaba. Alibaba was a great company, is a great company. China smacks them down, the stock goes down, and now it's come back up a lot, but not nearly to where it was. And this will put a bad taste, I think, in a lot of investors' mouths, because it's hard to deal with a stock that is so easily manipulated by a government. And I, for one, would probably say, again, just like I said about the overall market, particularly in these Chinese stocks, it behooves you to have a tremendous amount of patience and wait for all of the attention on it, negative attention, to subside before going in. Because there's a couple of things, even though they're disagreeing, and there's rumors now, is this the end of OPEC Plus? And there's some concerns, obviously, with the fact that oil and gas prices have rocketed up. Everybody knows who've gone to fuel up their cars recently that they're paying a tremendous amount of money. And oil did hit $77 briefly this morning before, as you just mentioned, it has started to sell off a little bit, which could be some profit taking. But there's also concerns that maybe the production will be increased regardless by individual countries, even though Iraq said they weren't going to, because they want to take advantage of oil at these higher prices. It's possible. News this week is the fact that they're releasing a lot more Bitcoin. And initially, we were worried that that might actually add like a flood to the market, and maybe it would break 30,000. But now with the action we're seeing where it's back up around, hovering around 34,000, it's very possible that those Bitcoins that are being released will be absorbed and bought, and that will actually turn out to be a bullish event. So that 30,000 continues to be a really big support area. 36 has been some interim resistance here. And of course, 41,000, where it was recently, is going to be the big test. If it gets through there, a lot of people are looking for a summer rally in Bitcoin to maybe back to 75, or even I've heard 100, I've heard 200. You know, you always get these big lofty numbers. In terms of the others, Ethereum actually started to outperform once again Bitcoin, which again, blockchain technology, that makes sense. And other than that, in terms of the other coins, we're still watching Ripple, XRP very carefully. There's still this lawsuit going on. I know there's been more people assigned to the case. I'm looking at XRP through 80 cents as probably a good buy. I'm not really watching the other coins as much. All I know is that with Dogecoin, Elon came out and now talked about baby Doge. I'm not quite sure what that's doing right now, but the whole crypto space will have these gyrations. But again, no matter what, even with China, this is what happened with the crash. China stopping the mining, other mining companies are starting to open up. And no matter what happens or no matter what government tries to smack it down, I think it's here to stay. Still sort of in an infancy in terms of its trend, with a lot more of a roseate future going forward.